Hi folks, this is Deepak Shenoy from Capital Mind taking you through Capital Mind Snaps option charts. The specific charts we'd like to see here, we'd like to cover here are option straddles, strangles and spreads. We are really the first in India to map all of these option spread charts, so you don't see individual option charts. We actually combine two options for you to do the standard option strategies viewed in one chart. It's great for technical analysis. I'll show you how. We're going to go to snap.capitalmind.in, charting F&O, and we're going to have a quick look on how these charts can be used. So first you go in here and you type a symbol straight away, the stuff that you understand. So Nifty 7,800 straddle, for instance, is just a symbol that you can start typing in. You have to change the chart type to a line because these charts don't have an open, high, low and close for each bar. The E symbols you see at the bottom are expiry dates. We're looking at a daily chart. We can actually go down and say I want to look at a 10-minute chart instead. A 10-minute chart would just add values at the 10-minute level. This is a Nifty 7,800 straddle. It's moved in from approximately 275 points and now it's down to 200 rupees. So we've seen a 75 rupee drop in exactly 2 days. It's a fairly good amount of money to be made if you're shorting straddles. The good part about a chart like this is you can actually set up a whole lot of technical analysis on it. So for instance, you could look at a straddle and say, I want to plot it alongside the Nifty. You just want to add a symbol called the Nifty right in here. And so you can see how as the Nifty has moved, the straddle, even though the Nifty has moved up substantially, it's moved up from, well, you can't see the values here, and the way you can do that is I want to show this on the left hand scale and change this chart scale to include the left axis. So you can see how the Nifty is moved up from around the 7,005, just below 7,500, all the way up to 7,790. That's the future here. And you can see in the same time the straddle's actually fallen substantially. And if you go back a little, the straddle behaved very differently even when the Nifty was falling. So it's not just when the Nifty is rising that the straddle falls in value, it also falls when the Nifty falls in value. The other part that we'd like to see here is it's not just straddles. So what if you said, okay, a straddle is simply the 7,800 call plus the 7,800 put. What if we said we want to see a strangle instead? I don't want to take the risk of a straddle, but what if I said 7,600 put and an 8,000 call? So all you do is go in here and type Nifty 7,600. That's the put part. You put a colon in the middle, type 8,000, which is the call strike, and say strangle instead. A strangle is an option strategy where you write a lower strike put and an upper strike call, or write or buy. You can see again here you've got the same Nifty and you've got a 10-minute chart showing you how the strangles behave. Now this has moved from 128 down to 65 in the last few days. In fact, it's been fairly stable earlier and then it just bumped up a little bit. If you use this terminology, you will actually see that it works from expiry onwards, and earlier than that you're going to see the previous expiry, which was the November expiry. If you want to lock this down to just give me data for the December expiry, just type 15 DEC. 15 is the year 2015, DEC is December. Just type enter and we're on board with the strangle only for the December contract. So even in November, in dates in November, you're going to see the December contract that would have been 2 months ahead. One of the other things that you want to see now is the different kinds of symbols that you could do. So you could do a Nifty 8,000 straddle, you could do a 15 December, that's specifically only the December options. Nifty 8,000 straddle in the dates of November will show you the November strikes. In the second one here, you would actually see the December strikes. You can also type strangle, you can type two more options. You have a 7,600, 7,800 spread CE. CE means the call option. Basically what we do here is we take the 7,600, the left side call, minus the right side call. So the idea would be you would buy one and sell the next one. So 7,600 call minus the 7,800 call. That would kind of give you a different chart. We can see that quickly online. You can see Nifty 7,600 colon 7,800 spread CE. This should give you, well, very quickly the spread as it has evolved. Now you can see that the spread has actually worked alongside, but it's a different scale. So on the right hand side is the scale for the option spread, on the left hand side is the Nifty. This will obviously behave very closely to the Nifty, but it has a different risk profile. So while the Nifty has gone up, about 100 odd points, the spread itself has gone up from only 74 to 127, just 50. It's a risk control spread, so it doesn't fall quite as much, doesn't rise quite as much. You can use options to control risk in this manner. You could do the same thing with the put spread. Just remember that your 8,000, the first one is the put, that is what we take on the left side. We minus the second one, the second put, and then we just show the difference. So you can actually trade this spread as an individual entity rather than something that you would trade separately. Look at both options separately. We really think, a lot of money has been made by just looking at these charts and trading them using the chart movements as a stop loss instead of trying to calculate where your stop loss should remain based on theoretical values. It's an interesting way to look at a stock, and we hope you make a lot of money from it. Do visit us, subscribe. We have a bunch of stuff that will work for you. We have smart caps, option analysis, macronomics, virtual portfolios, apart from this fantastic Snap platform that you can access. Visit capitalmind.in/subscribe. If you aren't a subscriber already, enjoy the charts. We hope you like it.